Hi, I'm Kyle Roder with this week's Crypto Burst. The crypto bull market may be finished, but with a recent rise in Bitcoin, many investors are beginning to look to the next rally in price. The buzz surrounds Ethereum right now as the network counts down to the merge. So what does that all mean? There are three key questions in the crypto space right now. A recent bounce in Bitcoin has many asking whether the crypto winter of 2022 could be coming to an end. Bitcoin saw a peak-to-trough drawdown of more than 74% after having topped out at nearly $70,000 in November of last year. The price is up more than 40% from its lows of $18,000, but prices remain heavily driven by market sentiment. Bitcoin has traded in a tight correlation with the Nasdaq, with both trading on changing expectations of US Fed policy as the central bank attempts to control inflation. So let's take a look at what the charts are telling us. The price of Bitcoin has ground higher as risk appetite returns to financial markets. The asset remains in a bear market and a clear downtrend, with price below the long-term moving averages and momentum flatlining. In the shorter term, Bitcoin is oscillating in a trend channel with key resistance just above US $25,000. The major level of support in the long term is the previous bull cycle high of approximately US $19,000. The next big question is around Ethereum. This gets quite technical, but it's important to understand. The Ethereum merge is designed to shift the cryptocurrency's blockchain network from proof of work to proof of stake. Proof of work is a type of network that relies on the acquisition of greater computational power to compete for rewards, while proof of stake randomly selects validators, someone who offers their computer to maintain the network, based on the total amount and time their Ethereum has been staked or locked up on the network in order to ensure its security and process transactions. The new model will see validators receive interest on their staked coins, with the change in process designed to make the entire system faster and more energy efficient. The merge is one of several upgrades that will happen to the system over time. The technicals look more favorable for Ether, which has seen price push through and hold above the 100-day moving average. The crypto remains in a primary downtrend as price meets resistance around US $1,700. The upcoming merge has boosted sentiment towards Ether, but given its riskiness and relative volatility, the crypto will probably be heavily influenced by monetary policy and risk appetite for now. The last question concerns both Bitcoin and Ethereum, and which will eventually be the most valuable crypto. Well, firstly, what's a flippening? It's a combination of the words flip and happening, and in the crypto community marks the event where the value of Ethereum overtakes that of Bitcoin. There is speculation that the merge and its expected impact on the price of Ethereum could be the catalyst of this event. At time of writing, the market value of Bitcoin is around $444 billion US, while Ethereum is less than half of that at just over $200 billion. While conceivably the flippening could occur by virtue of Ethereum's upgrades, the closing of the value gap will take time. Bitcoin and Ethereum have a statistically significant correlation of around 0.95, which tends to increase during periods of risk off. That means not only does Ethereum need to nearly double in value for the flippening to occur, it must also see its high correlation to Bitcoin break down, which is unlikely in this environment given the riskiness and tight correlations across the asset class. The long crypto winter could be over, but the performance of crypto assets, especially Bitcoin, remains highly correlated with other risk assets like stocks, and therefore depends heavily on the inflation outlook and central bank tightening. Ethereum's merge will be a massive event to watch in coming months, but any overtaking of Bitcoin by Ethereum will take longer than a few months to happen, if at all.